So we have a lot of movers and stocks to watch. Jenny Horne, host of Next Gen Investing, is with me. And I did mention Alphabet and those earnings and really some positive reaction. We'll talk about Intel later, but Google with an up arrow.
Yeah, thank goodness. I feel like the sigh of relief heard from the entire market because obviously Alphabet, a huge and an influenceable company right now, rising actually ahead of the open today after a strong fiscal first quarter, beating expectations, also announcing a 5% dividend increase and about $70 billion in stock buybacks. So showing signs of a healthy company, at least as far as the rearview mirror financials are concerned. Reporting adjusted earnings per share of around $2.81 a share on revenue of just over $90 billion. Both figures did top estimates as far as consensus was concerned. Their advertising revenue, though, $66.8 billion versus the expected $66.4 billion. Cloud platform revenue also was slightly worse, actually, than expected. I mean, you could call it in line, $12.2 billion versus estimates of $12.3 billion. That segment saw $9.5 billion in their revenue back in the first quarter of 2024. So goes to show still how much it's growing. But they are, of course, among the big, I would say they were one of the biggest tech names reporting first. And so I do think that there has been this feeling of unease regarding Alphabet and what its capex will look like going forward. And there has definitely been this transaction velocity. We've seen a lot in right now, a lot of these Mag 7 names. But I think, fortunately for Alphabet, this was a clean beat across the board. And I mean, we're seeing a nice reaction as such. YouTube revenue actually shocked me. It was one of the weaker spots within the print. But, I mean, that has also continued to grow with such a substantial pace in the U.S. as it dominates now, or it's at least a formidable competitor in the overall TV and streaming space. But that was not as much of a lift as I think many would have thought. But Alphabet into today's session has been somewhat in the middle of the pack of the Mag 7 on the year. We're down about 16.7% year to date. And now up about 5% on the week without today's move. So looking like we're closing out a winning week in Alphabet as well. I know you mentioned markets also, but still about 23% off its highs. And we'll have to see if we can make up any of that lost price, given, of course, how we opened today.
And also, the news that I was looking at this morning, and thank you for all of that, a great coverage there of Google and looking to the upside, Alphabet. But there was also news this morning that Apollo, which backs Yahoo, wants to buy Google's Chrome if they have to sell it. And I've seen reports on Bloomberg this morning. So that'll be very interesting if Yahoo actually acquires the Chrome browser. This is one area of Alphabet that may be less strong. I mean, we're looking more to AI and the other things and other parts of Google, less for search and such. So this may be very interesting. And if Yahoo acquires the Chrome browser and Google is forced to have this divestment, right, because of the regulations that are upon them at this time, it'll be a story to follow for next week, I believe. How about we take a look at Intel, which is a different story. Shareholders had high hopes for this name, and they've certainly been thrown around over the last year.
I know, and like in a complete contrast to Alphabet, which has been a winner of the last half a decade, let's call it, and then has obviously seen more of this repricing on the year. Intel has actually fared this year quite well, given that it is a tech name still. I'm not saying it's hugely, I mean, been seeing upside by any means, because we still have repriced about 42% to the downside, but it actually was up 8.4% on the year. We'll have to see again where we open today. But Intel has had a very different story. Actually, in the last 8 of 12 earnings reports, shares have traded lower. So there's a lot of blame being thrown around from their CFO, saying this is really a result of right now the macro situation, which I actually appreciated. They mentioned that the reason they saw such a strong revenue this quarter was because of this pull forward effect, where we're seeing this buying and anticipated buying, maybe in regards to prices being expected to go up. But their CEO, Lip Bhutan, this was his first address as CEO of the company, of course, did say that he sees the problems with the company and really laid out his framework in which to fix them, saying that they're going to, right now, their bureaucratic corporate culture needs a shakeup. So he's going to cut jobs, which were previously announced this week. but also remove layers of management, force everyone back into the office. So that was interesting. His commentary, though, in other areas of malaise, like their foundry business, were more broad. And I think that lack of clarity was also a bit frustrating. So again, a bright spot was no doubt that their sales came in above expectations, but you look at their guidance and right now some of the really disappointing metrics they're giving going forward. And I think that tells you that there's looming uncertainty in the market, no doubt, but there's also fierce competition, and Intel has continued to lose market share. You could only blame tariffs on so much. And I think that when you have a history like Intel of not being able to meet this bar for 8 of 12 last quarters, you can't just blame tariffs, because what was the excuse for the last 8? I think that's sort of where I stand with, unfortunately, a business that needs to continue to right-size itself.
Yeah, and the analyst over at Bernstein, Stacey Ragson, saying that this seems like a Herculean task to really turn around Intel, and that they missed the AI wave. They've fallen behind with their technology. They're trying, as you noted much of this, the foundry business, that they're really trying to revive that, but advising investors to, even at depressed levels, to avoid the stock at this point. Very interesting. A lot more to cover throughout this day. Jenny Horne, thank you. Good to see you.